Hello, everybody. This is David Blaine, CEO of Blue Sky Wealth Advisors, and I wanted to bring you a special message today. As most of you know, we're rapidly approaching the 20th anniversary of the terrorist attacks from September 11th, 2001 on the World Trade Center, the Pentagon, and of course, the plane that went down in Shanksville, Pennsylvania. And I thought it would be important to, first of all, recognize the sacrifices of those Americans that gave their lives that day, really for no reason. They were innocent people going to work that day, and a lot of people that worked in the World Trade Center were finance. I had some friends there. The ultimate act of cowardice is a terrorist attack, and we need to remember that. As you probably know, it's fundamentally changed America forever, and we should not forget the lessons that hopefully we've learned from that. Also thank those first responders who bravely went towards the crashing buildings, the flames, to try to rescue people. And then, of course, for the past 20 years, our military, who has sought out the people that caused those terrorist attacks. And I won't get into all the geopolitical reasons for that and why it happened, but I think it's important that we take a little bit of time to remember those people that gave their lives. Freedom is not free. Despite the issues we have or perceived problems, the United States is the greatest country in the world has ever known, and a lot of people want to tear it down. And September 11th was evidence of that. I also thought it would be interesting to talk about on this anniversary our role here at Blue Sky. As you may or may not know, my first career was in the military. I was in the special ops world. I was in the Ranger Battalion and the U.S. Army Special Operations Command. And at least the latter half of my career after the conventional Iraq War, the Gulf War, I spent in counterterrorism related things. And so it was no secret to us, Osama bin Laden and what was going on at the time. I think everybody remembers what they were doing. If you're old enough that day, I know I was in my home office at the time in Fayetteville. The Blue Sky back then was just me. I worked in a home office by myself, had maybe 20 or 30 clients, really wasn't making any money yet. And I'll never forget my wife coming down to my office and telling me that there was a plane had just run into the World Trade Center. And our lives were forever changed from that point. Based on what I used to do in the military, I actually received several phone calls from people. For those of you who don't know, I fractured 3 vertebrae in my neck. I have 3 artificial vertebrae from an accident when I was in the military. And so one of my last jobs, I actually wrote the special operations plan for counterterrorism and some other things in the Middle East. That was like my area of expertise. I had started out as a European, Russian expert and then moved to the Middle East area of the world. Anyway, so they called me back and wanted me to come back and help execute some of the plans that I had written. Well, at the time I had started my company, and I'm a very loyal person. I had left the service, and now I had some people, clients that were dependent on me and looking to me for leadership in this situation. And so I had to turn down that opportunity to go back and work on the counterterrorism program and stuck with what is now Blue Sky. At the time, we were called Blaine Investment Counsel. And what I wanted to share with you, we're going to post a copy of this whole thing if you care to read it. I think it's kind of interesting. But after the 9/11 attacks, I took the time, I wrote, I guess it's about a 4-page letter that should tell you something. I'm pretty sure I mailed this thing. I wasn't actually looking for this, but a couple of weeks ago, had to go in our archives looking for something, and I came across this letter from September, I think it was the 15th or so of 2001 that I had written to clients, and I'm pretty sure I mailed it, the old stick it in an envelope, put a stamp on it and mail it out. But, and just for nostalgia, I started reading it, and I was, and I thought it would be really important to share with you a couple of things. Number one, what I wrote that day, because in investing, people get so caught up in what's going on today, not just investing, but tax policy and economics and things like that. And the reality is things do change, and things do change overnight, or as we found out in the terrorist attacks. But at the same time, certain principles do not change. The concept of investing has been around really since humanity started. If you go back to different periods of time, the modern stock market started way back, as Christopher Columbus, the South Sea Company. It was a stock company. You could buy stock in the South Sea Company and some of the early explorers. And of course, Italy had a very vibrant merchant trade system. And anyway, the point is, investing has been around a long time, and there are certain principles that we follow no matter what the economy and no matter what happens, that time will tell. And I also wanted to say that, I personally have been through, the crises. This wasn't the first one. If you recall, when the terrorist attacks hit, we were actually in a recession. And I'll read from you the environment here that I wrote. The economy was very near or in a recession, 2001. If you remember, we had the dot-com bubble, all these technology stocks in 1999, 2000 that crashed in 2000, and we were just kind of recovering from it, but the terrorist attacks knocked back in. Corporate earnings were extremely weak and were more than likely headed lower. Technology and telecom fundamentals had fallen precipitously with little chance of near-term recovery. The stock market as a whole was neither cheap nor expensive, but there were individual stocks that were either over or undervalued. At the time, we actually built portfolios with individual stocks and bonds, and I'll tell you the story of why we changed from that at some other day. But suffice to say, it was not a very robust economy. And we had, some recovery after that, the terrorist attacks. Of course, here in the United States, 2008, we had the Great Recession. We've had, good presidents, some of the best presidents in history, some of the worst presidents in history. And I think everybody can agree with that statement. It's kind of funny. No matter what side of the aisle you're on, I think you'll agree with that statement. But we've had a wide variety of governing styles, let's put it that way. We've had a multitude of tax changes. Every president, every Congress that comes in changes the tax laws. We've had energy crises. We've had financial crises, subprime mortgage crisis, banking crises here and overseas. We had Russian ruble crisis. We had Spanish financial crisis. I don't even remember this. We had the European sovereign debt crisis. People thought Europe was going to collapse. We've had wars. We've had other terrorist attacks. We've had China, the rise of China, Iran, North Korea, all sorts of different things. And so despite all that, since 2001, the US stock market has returned 8.62%. If you start in 2002, it's averaged 9.72% per year. And that just shows you the resilience of the free enterprise system. Is when there's incentives, and yes, it can get out of control sometimes, and there needs to be, occasionally some soft-handed regulation. But the reality is the free enterprise system works. It's lifted more people out of poverty than any point in history, any other economic system. And this goes to show you, 8-9% a year through all these crises, all these different types of things. However, from the period 2000 to 2010, the return of the US stock market is 1.2%, what we call the lost decades. I lived through that. And that was kind of the point, is that we've been through that. It's not just me anymore. There's over 20 people that work here at Blue Sky now. There's 12 other advisors, and we've trained them and we've infused them with the experience that I have and some of the more other senior advisors to guide you through whatever is the future, because I do think we are at an inflection point. We've had some great stock market returns the past several years. Coming out of the Great Recession has been a great time. Looking forward, there's the specter of inflation. There's the specter of lower returns. In fact, we're updating our estimated returns right now, and I think the next 10 years, we should really expect a lot more muted returns. We do have a plan for that. We are adjusting some things in the portfolio very slightly, but it's not the time to make radical changes. And that's kind of the point I was making, is even after September 11th, you know, what were the impacts? Business activity slowed dramatically in the aftermath, impacted consumer spending, business spending, and capital investment. Monetary and fiscally policy, we had the Federal Reserve cut the discount rate to a 42-year low after 9/11. The political landscape changed drastically. But as I wrote way back then, 20 years ago, last week events have not changed long-term business prospects for the majority of publicly traded companies. Clearly, the short term has changed, but long-term business prospects are what drive long-term business values. Greed and fear impact prices over the short term, but these emotions are not sustainable. And that's applicable today as well. The long-term fundamentals remain intact as long as people want goods and services and they want a better life for them, their families, their kids, their grandkids. People will continue to innovate. People will continue to create companies and products and services that people want and need. And that's what drives stock markets. If we can continue to have that freedom and free enterprise out there, there's no reason to believe that this will not continue. Furthermore, what I wrote, and I think this is interesting to see, we're at the opposite end. Things are very robust in the markets we are in the middle of COVID. And of course, we had this debacle in Afghanistan. The withdrawal was severely botched. You know, there's plenty of blame to go around. I don't think, I don't want to debate as far as that, but the reality is the results were terrible, leaving all that equipment. I mean, we've literally created one of the largest armies in the world in a terrorist organization. So things, you have these negative things that people focus on. COVID, we're going to get through COVID. There are people dying from COVID, which I don't mean to minimize. In fact, there are clients that may be listening to this that have relatives that have recently died. And, we pray for those people, and we hope that we can, that this pandemic goes away quickly without taking many more lives. But the reality is, at some point, we will learn to live with it. I don't think it's going to go away completely. I think zero COVID is not a great goal, but we'll learn to live with it. We'll get through it, just as I wrote back in 2001. The financial markets are forward-looking. That's why stocks are always a good buy in a recession. Experienced, smart investors know the best time to buy is when there's maximum pessimism, when stocks are on sale because things can only get better. The only problem with this theory is no one, including myself, can precisely identify the point of maximum pessimism. And that's where we are today, but the opposite. The markets, yes, people are pessimistic. You have all these issues, but the reality is markets have continued to march forward. Why is that? A lot of it's because of low interest rates. What else are you going to do with your money? Put it in the bank, put it in a European bank and get negative interest rates? Of course, the bond market, very, very low returns. Here at Blue Sky, we're firm believers in real estate. There's still some good returns to be made in income producing real estate, and we continue to emphasize that. But at the same time, we don't know if the markets are a peak. We don't know if 8% is a long-term realistic number. We don't know if 9% is a long-term realistic number. But given where valuations are today and looking forward, we think more like 3 to 5% is a realistic return number for the stock market. Bond market, not going to make more than 1, 2, 3%. We think there is some opportunity to overseas, emerging markets. foreign markets. And this is exactly what happened in the mid 2000s. After 2001 and the US was plunged into recession, some of the foreign markets were very high returning. And by shifting our money overseas a little bit, we were able to triple the return. Now, granted, tripling 1.5% return is not a huge number, but the reality is foreign markets returned over 3 times the amount of the US in that same 2000 and 2010 period. And we think something similar is going to happen the next 10 years or so, as you're going to see some of the return shifting to these other markets. Okay, so just kind of in summary, I wanted to first of all remember, as everyone should, the impact of September 11th, and let's vow to make sure that something like that never happens, where 3,000 innocent Americans lost their lives, and then over the past 20 years, countless number of soldiers have lost their lives or were injured in this global, what we call the global war on terrorism. So first, we want to remember that, and our first responders who bravely went in to save their fellow Americans as best as possible. Second, we are going to post this letter. I'd encourage you to read it because it shows my philosophy on investing, which has served me well throughout my whole life, even before I started this company, still remains true. And that is our job, is to make sure that we are stewarding your money as our clients, giving you the best advice possible. And I really think we have a good handle on what's going on today. Different circumstances than it was 20 years ago, but the reality is some things never change, and we have a good handle on those. We have some plans in place to tweak the portfolios to position you and your portfolio for the next for the coming years, which I think will serve us very well. So if you have any questions on that, please don't hesitate to reach out to me, your advisory team. We're here to help you. We're here to guide you through no matter what the next decade or two brings. And I hope that 20 years from now, I'll be pretty old, but maybe I'll still be around and bring you another update on the 40-year anniversary of 9/11, and hopefully it will be as a robust update as we've had the past 20 years. So hope you enjoy the rest of your day. And like I said, reach out if you have any questions or if we can do anything for you. Thank you.